cars and homes. Now, debt totals here in New York aren't as high as some other parts of the country.
It's very overwhelming. There's so many choices and you don't know where to start.
Every month, millions of people see one number on their credit card statement, and that number may be keeping them in debt for years. This is Fiscal Forge. Imagine opening your credit card statement and seeing a number that looks completely harmless. Maybe it's $35. Maybe it's $50. Maybe it's even less. Most people glance at it for only a second. Then they make the payment and move on with their lives. But what if that tiny number was doing something much bigger than helping you manage your finances? What if it was quietly extending your debt month after month, year after year? Because hidden inside nearly every credit card statement is a feature so powerful that it helped transform credit cards into one of the most profitable products in modern banking. And the most surprising part? It's not hidden at all. It's printed in large letters for everyone to see. The minimum payment, a number designed to make debt feel manageable, a number that millions of consumers rely on every month, and a number that banks absolutely love. Today, we're going to uncover why this feature exists, how it became one of the most profitable mechanisms in consumer finance, and why understanding it could save you thousands of dollars over your lifetime.
Such as cars and homes. Now, debt totals here in New York aren't as high as some other parts of the country, but experts say it's troubling nonetheless. Our Seth Voorhees joins us now to discuss this further. Seth, what can you tell us?
Yes, some experts I spoke with say it's not really a surprise that more people are carrying more debt, especially given the rising cost of just about everything. But there is some help available. More people are walking through the doors these days at Consumer Credit Service of Rochester, where Karen Rando oversees a staff that's there to help them with their debt.
It's very overwhelming. There's so many choices and you don't know where to start.
Credit cards weren't originally marketed as debt products. They were marketed as convenience. Instead of carrying cash, consumers could simply swipe a card. Instead of waiting until payday, purchases could happen immediately. The concept was revolutionary, and consumers loved it. But banks quickly discovered something even more valuable. Credit cards didn't just increase convenience, they increased spending. Numerous consumer behavior studies have shown that people tend to spend more when using credit compared to cash. The psychological pain of spending becomes less immediate. The transaction feels almost invisible, and that creates a powerful effect. Consumers buy more, balances grow larger, and banks gain access to something incredibly valuable: future income. Every swipe represents future earnings being spent today. That's why credit cards became one of the most successful financial products ever created. Not because of annual fees, not because of reward points, but because they transformed future income into present-day spending. And once balances began growing, banks faced an important challenge. How do you keep customers paying without overwhelming them? The answer would become one of the most profitable innovations in consumer finance. Every month, credit card companies send a statement. Most people focus on only two numbers: the balance and the minimum payment. The balance looks intimidating. The minimum payment looks manageable. And that's exactly the point. The minimum payment creates psychological relief. Instead of facing a large debt all at once, consumers are presented with a much smaller obligation. Maybe the balance is $4,000, but the minimum payment is only $80. The debt suddenly feels affordable. The problem is that affordability and repayment are not the same thing. The minimum payment was never designed to eliminate debt quickly. It was designed to keep accounts current, to keep payments flowing, and to keep consumers engaged with the credit system, because every month a balance remains unpaid. Interest continues accumulating, and every month interest accumulates. The revenue stream continues. From the consumer's perspective, the minimum payment feels like a solution. From the bank's perspective, it's often the beginning of a much longer relationship.
The report says more young people are falling behind on repaying or defaulting altogether on their student loans. Rando says it's almost taboo for people to talk about their finances. Getting out of trouble may start with a difficult discussion.
It's going to force people to reevaluate what they're spending their money on and to determine, can I continue living the way I have been?
The real power of minimum payments isn't financial, it's psychological. Humans naturally focus on short-term problems. When a large balance creates anxiety, a small payment offers relief. That relief feels rewarding. The brain interprets the payment as progress, even when very little progress is actually happening. Behavioral economists have studied this phenomenon extensively. People often judge affordability based on monthly payments rather than total cost. That's why financing works. It's why subscriptions work. And it's why minimum payments work. Consumers ask, can I afford this month's payment? Instead of, how long will this debt actually last? That subtle difference can turn a short-term balance into years of repayment. And because the process happens gradually, most consumers never notice the trap until significant interest. The danger of minimum payments isn't immediate. It's cumulative. A balance survives 1 month, then another, then another. Interest keeps accumulating. New purchases are added. More interest appears. And slowly, debt begins behaving like a snowball rolling downhill. At first, the increase feels small, almost invisible. But over time, compound interest begins working against the borrower. The same mathematical force that helps investors build wealth can also make debt far more expensive. Most consumers dramatically underestimate how much interest they will pay over several years because they focus on today's payment rather than tomorrow's total cost. And that misunderstanding is exactly what allows balances to survive for so long. This raises an uncomfortable question. If minimum payments keep balances alive, who benefits? The answer is surprisingly simple. Banks, credit card issuers, financial institutions. Interest income remains one of the largest revenue sources within consumer lending. And the most profitable customer isn't someone who defaults. Defaults are costly. The most profitable customer is someone who continues paying reliably while carrying a balance, month after month, year after year, not trapped, not bankrupt, simply revolving debt indefinitely. From a business perspective, that's an ideal outcome because every additional month generates additional revenue. And that's why credit card companies invest heavily in keeping customers engaged. Not necessarily because they want consumers to fail, but because carrying balances is extremely profitable. The true cost of minimum payments isn't just interest, it's opportunity. Every dollar spent servicing debt is a dollar unavailable for investing, saving, building an emergency fund, or purchasing assets. Many consumers focus on the visible cost of debt. Few focus on the invisible cost. What that money could have become? Over 10 or 20 years, the difference becomes enormous. The money that could have built wealth instead finances interest payments. And that's why minimum payments are more than a debt issue. They're a wealth-building issue. The longer balances survive, the longer financial progress gets delayed. Fortunately, understanding the trap is the first step toward avoiding it. The goal isn't to avoid credit cards entirely. Credit cards can be useful tools. They provide convenience, fraud protection, rewards, financial flexibility. The key is preventing convenience from becoming dependency. Whenever possible, pay balances in full. Focus on total debt rather than minimum payments. Understand how interest works. And remember that the most dangerous financial traps rarely feel dangerous in the beginning. They feel comfortable, manageable, even helpful. That's exactly why they work. Because by the time the true cost becomes visible, years may have already passed. The minimum payment may look like a safety net, and in emergencies, it can be. But understanding what it was designed to do changes everything. Because the most profitable customer isn't the one who never pays. It's the one who never finishes paying. And once you understand that distinction, you begin seeing credit cards differently, not as free money, not as extra income, but as a financial tool that requires careful control. Because in the world of banking, small numbers often hide the biggest stories. And few numbers tell a bigger story than the minimum payment printed on your credit card statement.
Well, debt does, of course, provide some difficulties, some tough situations for many, but there is some more advice. One piece of advice, have a budget. Write down your expenses versus your income and try to figure out those things that you don't need. Also, don't be afraid to speak with a certified credit counselor if you feel like you're getting in over your head. Guys?
And perhaps that's the biggest lesson hidden inside every credit card statement. The most dangerous financial traps rarely look dangerous. They look convenient. They look affordable. They look harmless. Until years later, when you realize how much of your future income has already been spent. Because in today's economy, understanding money isn't just about building wealth. It's about protecting yourself from systems specifically designed to profit from financial mistakes. If you enjoyed this breakdown, subscribe to Fiscal Forge. Every week, we uncover the hidden financial stories shaping the lives of millions of people across America and around the world. Because the more you understand how the system works, the harder it becomes for the system to work against you.